Hello and welcome to Trading Hour. I'm Sonia Shenoy. With me is Surbhi Upadhyay and Pavitra Parekh. It's what, after 8 days of losses, finally, markets are heaving a sigh of relief. The markets are in the green. Whether this sustains or not, time will tell. But the good part is not only has the market opened up in the green, we have built on to our gains, a tad bit, of course, but built on to it. It's been a stable day so far. The Nifty holding on above the 17,400 mark. Now, it's important to see a couple of things. One, whether we continue to sustain these gains. Two, whether the 200-day moving average, which the market has now conquered, it's about 17,384, whether that holds or not. A lot of pockets are doing well, but it is purely a pullback that you're seeing, whether it's in the Adani Group stocks, whether it's in the new age tech companies. There's a big pullback that you're seeing. Nykaa, PB Fintech, Zomato, large trades over there. And M&M is also in the green after the CLSA upgrade. So let's see which way things head. But for now, I think, suffice to say that a pullback was coming. It was just a matter of time. But whether it holds, that's the key.
That proverbial question, right? Is this a dead cat bounce? And if so, how long will the cat keep bouncing for? I was almost scared to wear this little bit of green, right? Because the color of the day and the days has been red for so long. But in any case, I guess...
It's an old world, phrase, right? Dead cat bounce. Way back in the day, we used to use it so frequently.
It just tells you how old we are getting, right? So, yeah, we're trying to see how long this, dead cat, if that's what it is, how long it can stay up in the air, how long it can keep bouncing. Well, it has good comfort and cushion today from global markets and also from the fact that the FPI selling number has reduced. So since the month kind of, has wrapped up, I just looked at the data and that's been reassuring. If you just simply pull together the trends, then the selling has come down to 5,000 odd crores, 5,300 compared to almost 29,000 crores of selling in January. So that's the positive aspect of it, and that perhaps explains why we're not getting huge, deep gashes. And the market, in best case scenario, has been in a very tight range. It's not sliding away in a one-way fashion beyond a point. Of course, the last 7-8 days have been very, very challenging. But the overall trend is that FIs have stopped selling as much. Now, will this continue or not? That's the billion-dollar question. I was looking at data out of China, by the way, this morning. The Hong Kong market actually is up about 3%. Big surge in mainland China and in Hong Kong. There's the Hang Seng Few 3.5% right now as we see. The manufacturing numbers that have come in from the Chinese markets today are very, very strong. This is the official manufacturing PMI. And it's the highest level that we've seen in the last 12 years, 11 to 12 years. That's the kind of increase. And obviously all kinds of stocks in China are running. Technology, consumer, restaurant stocks, everything's up and about.
Hong Kong also has another reason to celebrate, right? They've finally scrapped the masking mandate. Yeah.
After 3 years.
After 3 long years, I can imagine the frustration and now, of course, the relief that's come through.
Maybe that's also contributing to this 3.5% up move on the Hang Seng. But I guess that's what we have to wait and watch. When today there's a bounce, so far it's been durable, Pavitra, but that's the question. I'm just almost scared to think about the second half, and the bulls will really hope that for once this can be a solid close today.
Let's see how it moves from here. But like you said, we do have some green on the screen. The metals pack has bounced. It has been under pressure. We've been talking about that through the week, through last week as well. So today, some of the top gainers are from the metals pack. So when I was talking about the Adani group of stocks, all of them holding in the green. You also have a lot of the auto stocks today, which are doing well. They are holding up well. Bajaj is up 1.5%. Of course, it has seen sharp cuts earlier in the week as well. The Feb sales weren't looking so good, but the stocks are holding up well right now. And the PSU bank index is also doing quite well today. So SBI is up, but these are some of the smaller banks as well, which are doing well. If you're seeing some red on the screen today from the larger names, it's definitely from the consumption stocks. So the likes of Britannia, Tata Consumer, you have Godrej Consumer, these ones seeing some cuts right now. So that's what's going on with the market action. We will keep tracking this. But first up, let's get a conversation going on the show now. Monte Carlo Fashions is the first stock that we are tracking today. The company posted a good set of Q3 numbers with a revenue growth of 12% and a constant EBITDA margin of 25%. So that's remained quite steady as well. The company also opened 30 new exclusive brand outlets in Q3. So to discuss the outlook going forward, what margins could really look like with the cotton prices coming off, we are joined by Sandeep Jain, who's Executive Director of Monte Carlo Fashions. Mr. Jain, thanks a lot for joining us. This is Pavitra. I will come to the margins and what cotton prices are looking like in a bit. But if I can just start by asking you about your Q3 performance. Revenue growth has looked very good. I think you've seen a 12% growth of over 500 crores for this quarter. I know earlier when we spoke, you said you're expecting 20 to 25% for the full year. It looks like you can do well above that. Would you want to revise that guidance?
We would like to maintain our guidance, whatever we have stated earlier, as Q3 was a little softer as compared to our expectation because the winter season actually began a little late. But the Q4 is, I think, a little positive as there was USS and we have been able to clear our inventory. So that gives us the confidence that we'll be maintaining our guidance of 20-25%.
Okay, that's great. Maintaining your guidance of 20-25%. It's important because there is a consumption slowdown, very evident, Sandeep, both in the global as well as in the local market. In fact, a lot of the US companies have cut down their guidance as well as they're seeing a slowdown in consumption. Some of the large players, Home Depot, Target have spoken about a slowdown as well. Tell us, in the home textile segment, you had a target of 160 crores of sales for FY23. Do you hold on to that? And do you think that you would have to perhaps scale down your growth targets for FY24?
Sorry. I think we set a target of 160 CR. So we should be around that number, here and there 5 CR. And in case of financial 24, we are very confident that seeing how this year ended, see, the exact guidance we can only give once we have the complete data in our hand, that is by 31st March, as to see the inventory. But we are confident that we'll be going to have a growth of another 15 to 20% going forward also.
15 to 20% growth going forward. Sandeep, hi, good morning. Can you detail out for us how much of this will come in from exports? Because there's a lot of talk about this recession in the US. What are your customers and clients saying? And how are you looking at shipments to the overseas markets this year?
Fortunately, we are present only in domestic market. So we don't have any exports. So that is why we are more confident as compared to some of our export, colleagues, as we sell only in domestic market.
I believe that you had some presence in the home textiles division. Is that right? Or you were planning to get into it? Just checking, given the notes that I had.
In home textile, already we have a good presence. I just spoke about that. We should be doing around 150, 160 CR turnover in this financial year as well.
Okay, got that. That is on home textiles. Mr. Jain, if you can also take us through what you're expecting on the margin front, because, like I was mentioning, the cotton prices have come off significantly. Last year, I think we had them at all-time highs, but from that level, it's seen a significant correction. So can you tell us what this could mean for the company's margins going forward?
I think this is definitely a very good, the raw materials have softened, so it's very good for us. And it will help us to improve our margins in cotton products going forward.
Okay, will help you improve your margins.
Can you tell us by how much?
Yeah, how much?
I mean, it's at 44% now. So this is for the gross margin. Can you tell us what it could look like?
I can't give you, the guidance in that particular range, but whatever margins we are having right now, it definitely improve in cotton products going forward.
Okay, so if I could just take a follow-on that, to what extent is cotton, part of your portfolio in terms of just the percentage? You would be, of course, using other fabrics as well. And what's the outlook? I mean, considering that we're talking about a heat wave, etc., are you expecting that part of the portfolio to do better than the rest?
I would say that broadly, it should be around 40% of the total package of what we do in cotton products. So by that, you can, guess it out. The 40% will definitely have more margins going forward as the cotton prices have softened.
Okay. Just in general about demand, right? I mean, you said that you maintain your FY23 revenue growth target of 20 to 25%, and there is healthy traction as far as demand is concerned. I think you had a guidance of opening 40 to 45 new EBOs by, I think, the end of the next year. Can you just tell us, are you on track to do that? I think in Q3 you had 13 new EBOs. And so what are the expansion plans looking like since demand has picked up?
We'll be overachieving our guidance. We'll be, I think, crossing 45 store guidance, which we have target for this year. And next year, we would be opening one store every week. That is around 50 to 55 stores for next financial year.
Sandeep, just a question on winter wear, which obviously is a big part for you. Given that we've had an unusually warm winter this time around, could that dent top-line numbers at all for Q4?
I think the guidance which we have given is considering all these factors. But the only problem we had in this was in Q3, the demand was a little bit lesser because of warm winter. but it was compensated by the Q4 USS sales. So overall, I think the guidance will remain same, but definitely yes, the MRP sales have little come down because of October, November, December was little warmer as compared to last financial year.
Okay, all right, we'll leave it at that. Thanks a lot for joining in. That's Monte Carlo with the business update. Let's take a short break. Up next, we'll discuss what's buzzing in the commodity space. Manisha Gupta is going to be joining in just a bit.
Welcome back. Equities are holding up quite fine after a long gap today. Let's look at what's happening in the world of commodities. We have Manisha Gupta joining in. Manisha, are you looking at gas prices today?
Oh, well, yes. You know, the strong China's data has supported all commodities across board, all industrial commodities, whether it's metals and energy. And the gas prices have continued to run up as well. We've already seen a gain of 2% over the week. And right now, today, we are trading at 5% up on the gas prices, if that chart comes in on your screen. And this is after 6% of a decline that we've seen in the previous month there. This is a chart on gas on what we've done in 2023 till time. So we started the year on the higher note at 3.6, and then the winter wasn't so harsh. It was warmer, above normal temperatures. We saw the prices decline all the way to below $2 as well. Currently trading at $2.8 per MMBTU, and we are way lower in the year and from the highs of 2022 when we were trading at $10 per MMBTU there. This is a report from PPAC which says that they are anticipating consumption of petroleum products and fuels to hit a new record in year 2023 and 24, and the expectation that the India import for the current year season, that is, will be 85% of its crude requirement. Interestingly, we've been talking about gas today, and when you look at those numbers, the PPAC also has put out saying that for the first half of Feb, the sale of LPG was at 1.39 million tons, which is 12% higher than previous month. So on a month-on-month basis, we've seen a huge jump up or gain when you look at those sales numbers there. When it is compared to last year, we are 4.1% on the higher side. Compared to 2021, we have seen 14.5% more sales, and compared to Feb 2020, 21% more sales is what we've seen in this year between Feb 1 to 15. Very encouraging, strong bullish data also comes in from IEA, which says that right now we're looking at 5 million barrels per day of consumption in India. 2021 was 4.7. By 2030, this level could be at 6.7. And by 2040, 7.4 million barrels per day of crude oil consumption is what India would be doing at. Most analysts also believe that the second half of this year, you could be looking at gains coming back in case of crude oil prices. Markets are tight, so we're looking at levels of around 90 plus in the fourth quarter.
Okay, thanks a lot for that. So that's in the commodity space. But let's talk about a new IPO that's opening up today in the auto ancillary space. Divgi Talk Transfer Systems IPO opens today. Jitendra Divgi, who's the managing director of the company, joins us to talk more about that. Just to give you a little more details on the IPO itself, it's a fresh issue of equity shares aggregating up to 180 odd crores. The proceeds by the company will be used for funding capex. It's an auto component manufacturer. It provides a whole range of turnkey solutions to automotive OEMs across India, the US, China, Korea, and provides a lot of dual clutch automation transmissions, etc. Their marquee customers include names like Tata Motors, M&M, and some global suppliers. So let me get the management on board. Mr. Divgi, thanks a lot for joining in. You know, I was going through your financials, and in the past 3 years, say from FY20 to 22, you've seen a compounded growth of over 20% on your revenues. Tell us a little bit about the way forward. Is this a sustainable growth rate, and what are the growth triggers for your business?
Yes, thank you very much for this opportunity to reach out to the investment community. Maybe I can take a moment to just sort of give you a little bit of the background and context that will set the stage for the answer. So we are in the business of making gearboxes of various types for the automotive industry. We have a long history in the Indian market. And sort of pioneer in bringing electronically controlled gearboxes into the Indian market. For about 21 years, we were a joint venture with a renowned American corporation. And since 2016, we've been sort of forging a path on our own. Going forward now, we're looking at transmission products in the EV space and taking advantage of the growing demand for automatic transmissions in the country. So in addition to that, our play is global. So that gives us additional options and sort of elbow room to look at growth opportunities.
Can you just help us with what the market share is currently, both in the domestic as well as the global market, just to set the context? What's the market share of the company?
So in four-wheel drive products, I believe that we don't have a peer in the country. We are one of very few companies in the world making the type of four-wheel drive products that we do. I believe we are also a pioneer in indigenizing and localizing transmissions for EV applications. And our new plant in Pune is in the process of being commissioned, and will go on stream later in March and April to commence manufacture and supply of EV transmissions. And I believe at this stage in the market, we are the only indigenous manufacturer of EV transmissions. As far as some of the component work is concerned, we work with a lot of other peer groups in the industry, and it would be sort of difficult to give you an exact market share, because there's a whole variety of componentry that's used in transmissions of various types.
Mr. Devgi, I heard your point about automatic transmission. I think most of us will agree. I've driven a manual car all my life, but my next one's definitely going to be an automatic, right? So we're seeing that transition play out. Do tell us a little more about how your business is, how does it comprise between domestic revenues and what you're getting from the export markets, and a little more color on exports. Is it largely US OEMs that you're working with, or European? We just need to map this, considering some of these big markets, US, for instance, there's a lot of talk about recession and slowdown.
Certainly, and it's a pleasure. I think, thank you for asking this question. So if you look at historically, our exports have been between 25 and 40%. And it's been a sort of variegated overseas market. We've been exporting to China, Korea, until the Ukraine war broke out. We were exporting transmission systems to Russia, UK, Europe, and of course, North America, both the United States and Mexico. So this kind of diversified global presence has always characterized our portfolio. In recent times, in the last year and a half or so, you can imagine with the way that the geopolitics has played out in the world, there has been a little bit of a dent. But on the upside, what is a sort of conducive environment for us is, of course, the disruption that is being caused by electrification in Europe, in a little bit in the US, is certainly compelling many OEMs to sort of reconfigure their supply chains to try and address a shrinking base that they're operating from. And also, as you are aware, there is a China plus one kind of approach to supply chains now, both in Europe and North America. So these two trends, based on this, we are seeing a considerable uptick in work coming to India.
Okay, got that. Mr. Devgi, thanks a lot for joining us. That is on, some of the countries abroad that you do export to as well. But one question I want to ask you, and one of the key concerns, is that you have a very high customer concentration, right? I think your top 5 clients make up around 90%. What are your thoughts on that? Because it is a very small amount, making up such a large chunk of the business.
Well, let me look at it this way. If you look at the last 2 years, you are aware that we've been sort of wading through this crisis of the pandemic, and uncertain geopolitics. But despite that, you'd notice that we've posted a healthy growth. And I believe that that is the outcome of a basic strategy of having a product and application diversity and also geographic and market diversity. And when you have this approach, even when one or two things go down, there are other things to help you pick up the slack and move forward. And I believe with the kind of pipeline that we have, we will be able to sustain our business model going forward.
Mr. Divgi, just a quick last question. We're completely out of time, but I just wanted to understand that the revenue that you did in FY22, about 234 odd crores, I'm not sure if the EV transmission business had already started kicking in or whether more of that will be seen in the coming years. And as you're talking about this big disruption, just leave us with some thoughts. You can't give us exact numbers, but how much will EV transmissions start contributing to your business, say, over the next 12 to 15 months?
Let's look at it this way. Up to now, EV transmissions have not been part of our portfolio from a steady state revenue standpoint, but we are just coming off investment in capacity for almost 100,000 transmissions a year. And I think that should give you an idea of the direction that we are going in. Suffice it to say that we will have a fairly robust vertical developed in components, in systems, and in exports for EV products, transmission products, that is.
Okay, well, all the best for the IPO. Thanks a lot for joining in and giving us a lot of details on how the business is shaping up, what the business is exactly. It benefits retail investors who perhaps would be interested in the IPO. Thanks a lot for joining in. Let's slip into a quick break. When we return, we'll discuss market technicals with Mitesh Thakkar of earningwaves.com. We will also discuss some top trading bets coming in from him. Stay tuned.
Okay, we're at the high point of the day, 0.7% higher on the Nifty. So we're currently at 17,430. So it is definitely a good day after 8 straight days of losses. The Nifty Bank is also moving up. It is around 380 points higher. So looking like quite a good screen for now. Let's get you a technical check with Mitesh Thakkar. Mitesh, like I was pointing out, we finally have some green on the screen, you know, after all of these days of selling. Would you take a call on just the index level? And do you expect this kind of up move to sustain?
Good morning. We were talking about the fact that, you know, the markets are going to oversold, and despite the fact that we had broken the 200 average, because of the last 8-9 days of fall, we were not shorting the futures market, but had some put options position which was squared off. I think 17,450 is a key level to watch. Once we start getting past that, at least some intraday reversal will happen that could see the markets try and attempt levels of 17,600, 650. So in the short term, trading with mild positive bias.
Okay, trading with a mild positive bias. Mitesh, I wanted your thoughts on individual stocks. Also, if you can help us with your views on auto names, because while an M&M is doing quite well, on the numbers front, you know, something like a Bajaj Auto, despite the stock being up, numbers are not that impressive this month. So do you see volatility in the auto names, and what else are you looking at this afternoon?
Honestly, I think over there, Bajaj Auto, with that big fall which happened on Monday, I think, you know, kind of went into a negative trend. Now it could give a pullback to about levels of 37, 60, 70. But I would be surprised to find more upsides beyond that. So I think around those levels would attempt a short trade as well. But the other names, I think, you know, Tata Motors and Maruti look sideways to me. M&M is a big outperformer in the auto segment for the last few months. But again, I think over here also, the stock looks like, you know, maybe around 1320, 1340 zones will face a lot of supply. So the upsides will be capped. So auto, I think, you know, for the timing will be on the avoid list from a trading point of view. What could possibly catch my attention is Tech Mahindra. After a big rally about 7-8 days back, the stock had a pullback for the last 5-6 sessions and now it's picking up again. So that's a buy with the stop at 1100 for targets of 1160. And some reversal happening on the charts of UBL. It declined from 1800 to about 1400. Now it's reversing. So that's a short-term buy. Keep the stop around levels of 1455 and look for targets or pullback to about levels of 1500, 1510 on the upside.
Okay, Mitesh, we'll leave it on that note for today. Thank you very much for joining in. Touch base with you again in the afternoon and see how the market shapes up. Quick break on that note. When we come back, we'll be putting the spotlight on the banking sector in our special segment, FinStreet. Stay tuned.
All right, welcome back. As promised, let's get you a quick update on what's happening in the market. Looking very good and building onto its gains now. The Nifty is up 130 odd points. Vikas Khemani of Carnelian Capital is joining in to debate what's been transpiring so far. Vikas, this is what the longest losing streak we've seen in a while. I mean, 8 straight days of losses and now finally some relief. What's the sense you're getting? Do you think this is a year where equity market returns may not be too great and there are better opportunities in other asset classes like fixed income? Do you raise cash levels now? What's the best way to approach the markets?
I think clearly right now mood seems to be pretty much somber, and view is that there's no immediate trigger in the market, so why should you sort of take an exposure? And my view is slightly different. If you see last year, we had sharp rise in inflation, sharp rise in interest rates, and strength in dollar, and all of them were negative, for the markets in general. And we saw impact of that playing out throughout this year. And all these things have, in my opinion, peaked out, and reversal in some sense has started or will start. So, and market, we know that tends to reflect things in advance. So when these things were going up, the impact of that on demand happens with a lag, and which is what we are seeing. And same thing, I think, in my opinion, will happen probably 6 months down the line or the other way around. And as far as the markets are concerned, if you ask me, the best time to deploy money in the capital market is when there's a one-sided negative view on the market, and which is what is right now, sort of, in my opinion, market is by and large, you can characterize the mood of the market that, one way, there's no trigger, why to invest, hardly any return to become by. But my point is that when macros change or reverse, they tend to again impact with the lag, and market tends to factor in advance. So my sense is that the second half of this year will be far better than the first half. But net, I think this year will be better. There's no, in my opinion, my expectation is that second half of this year will be better. And as these macros start turning, you will see markets kind of doing well. Corporate earnings have been reasonably all right. I think banking sector is holding on, IT is holding on, capital goods are holding on, telecom is holding on, consumer might be mixed bag. Metals, I think, in my opinion, of course, is a high base, but should not be very bad either. So, I don't think there's a major risk on the earnings side. Even if you make 13-14% earnings growth, at least there's a case for that much return, right? And markets tend to surprise. So I think, there's a structural good place in the market. When markets are kind of sold off, people are, and by the way, Adani kind of incident happened, which is a very serious incident. Market showed its resilience and bounced back from the lows. That also tells you the underlying strength of the market. So market might correct from a time correction perspective. We are kind of in a narrow range, but I personally think that second half could throw a lot of surprise, or maybe even earlier. Who knows?
Vikas, hi, good morning. So I just had a specific question on banks and how you would approach the sector for the rest of this year. Today we're talking about Axis finally completing the Citi acquisition. So it's an interesting day. But in terms of strategy, are you looking to play a lot of these big private sector names with large retail franchise, or would you look at big lenders like an SBI, and you would rather look at the capex cycle and look at their industrial exposure? And is that the way to go?
So I think we are in favor of large banks with good balance sheet, good customer franchise, and a reasonably good technology platform available. And I think most of the large players, whether it's ICICI Bank, Axis Bank, or State Bank of India, all of them are well placed in that. So I think all of them, in my opinion, will do well. They have a good liability franchise. The growth is coming by across the sector, both corporate and retail. Last 3-4 quarterly numbers are very much visible to you. Margins are holding on. I think there might be a case of bit of a worry when interest rates come down, but I think that's at least 6 to 8 months away, and things happen with a lag. So I think earnings next 2-3 quarters should not be a problem at all. And as numbers come by, I think markets will get a little bit comfort. So I think banks should do well according to me. Banks should probably lead the market.
Okay, that is on banks. Vikas, thanks a lot for joining us. Quickly, if we can get your take on the auto pack as well. I mean, there's very mixed news, right, when it comes to autos. On one hand, you have M&M, which is doing very well for, say, its SUV volumes. But then you have news of Bajaj, which is still under pressure pretty much because of what's happening on the export front. Would you play this pack? And if yes, and what do you like within the space?
You do play, because I think auto cycle has come out of a long consolidation, and again, there are company-specific models and issues, right? I mean, Bajaj is more export-driven issue. I think Mahindra is more than either one is number, and secondly also corporate restructuring is also another issue, positive which is working for them. So net we are positive on the auto cycle. We've been playing through M&M, we've been playing through Eicher Motors. We used to have Bajaj Auto, which we sold off. So we've been playing through some of these names. We have even Maruti in our portfolio. So I think auto pack should do well. There's a pent-up demand. Commodity prices coming down also kind of helps them. So I think reasonably we think the sector should do well.
Okay, Vikas, always great speaking to you. Thanks a lot for joining in and have a great one. That's Vikas Khemani of Carnelian Capital. Interesting, he's saying that the best time to buy in this market is when everyone's fearful, and that's right about now. So good time to deploy some money. Let's slip into a quick break. When we return, we'll put the spotlight on the banking sector and our special segment, Fin Street. Stay tuned.
Welcome back. Here with us on Trading Hour, and the gain in the market is looking pretty smart now. We're looking at a 0.7% increase in the Nifty, and it's actually the Bank Nifty that's doing a lot of the heavy lifting with a gain of about 1%. So good going for the large caps, at least as of now this morning. Day's high on the Bank Nifty as well. Well, speaking of banks, it is time to go across to Abhishek for our special segment, Fin Street. Today, Abhishek brings to you the Q3 report card from the banking system. Abhishek.
Well, Surbi, PSU banks are on fire. I did say in my Q4 FY21 review that PSU banks have come back, and how their report card for Q3 FY23 is nothing short of a record in last 8 to 10 years. In fact, for the banking sector, the report card in Q3 FY23 was one of the best that you are seeing in last 8 to 10 years across counts like profitability, asset quality, etc. So let's first talk about operating profits. Now, banking sector saw robust growth in operating profit, up nearly 29.5% YOY and about 11.5% sequentially. You'll be surprised to know that, the operating profit growth of PSU banks, both YOY and quarter-on-quarter, is better than their private counterparts. PSU banks saw operating profit growth of 33.5% YOY and more than 11.5% quarter-on-quarter, while private banks, they saw their operating profit growth of 25.5% YOY and about 11.3% quarter-on-quarter. The share of PSU banks in the pie of operating profits has increased both YOY and quarter-on-quarter. Now, coming to bottom line or the PAT, so banking sector recorded their highest ever quarterly profits in Q3 FY23, which was up about 45% YOY and 11.5% quarter-on-quarter. PSU banks have been reporting positive profits for last 11 quarters in a row. So profits for the PSU banks was up nearly 64% YOY and about 12.7% quarter-on-quarter, while that for private sector was up about 32.3% YOY and 10.5% quarter-on-quarter. Profit after tax was aided by the fact that net interest margin expansion was robust and there was lower credit cost this time around. So coming on to asset quality, slippages, you won't believe that PSU bank's annualized slippage ratio is at a mere 1%. So slippages of the banking sector was down 3.5% YOY and about 4% sequentially. In this, the PSU bank slippages were down nearly 21% YOY and more than 19% quarter-on-quarter. Private banks saw slippages increase by 14.3% YOY and nearly 11% quarter-on-quarter. The share in total slippages of the PSU banks is now at 42% versus 51% that we had in the same quarter last year. So annualized slippage ratio, which for PSU banks was at just 1% when compared to 1.33% in the previous quarter, and for private banks it was at 2.41% when compared to 2.25% in the previous quarter. The total restructured book of the banking sector, X of IDBI Bank, is now below 2 lakh crore or less than 1.5% of the loans. We did witness slippages rise for private players, which was largely from the restructured portfolio. On the other hand, the restructured book declined faster than PSU counterparts for private banks. Bandhan Bank is now restructured book free. So in Q3 FY23, the restructured book share, the lowest is for CSB Bank, Kotak Bank, Axis Bank and SDFC Bank, while above 5% on the higher side, we have DCB Bank, Karnataka Bank and Indian Overseas Bank. Now to some glitches in Q3 FY23. YOY operating profits declined for Bandhan Bank, DCB Bank, RBL Bank and South Indian Bank. On a sequential basis, the operating profits declined for IDBI Bank, Karnataka Bank, PNB and South Indian Bank, while Tamil Nadu Mercantile Bank is the only bank to see loan book decline sequentially. Back to you.
Abhishek, thanks a lot for bringing us that complete snapshot of how banks have fared in Q3. This is something we've been talking about as well, right? That the Q3 earnings was really held up by what we saw come through from the financials. But on that note, we do have to get into a short break on the show. There's lots more market action coming up in just a bit, so stay tuned. Welcome back. You're still tuned into Trading Hour. Now, the Mobile World Congress is underway in Barcelona, and they're hosting a number of senior executives from top global companies and trailblazing tech businesses. On the sidelines, CNBC-TV18's Shibani spoke to HCL Tech's Global Chief Technology Officer Kalyan Kumar B on the key product launches, trends, and business opportunities. So let's listen in to that conversation.
We've been a regular attendee at Mobile World Congress as HCL Tech. This year, our focus is primarily around 5G acceleration. How do we really help enterprises and customers adopt 5G at scale? And we also have a presence of our software division, HCL Software, which is really building software product to help connect both the digital and the network side of a telco and help them operate efficiently and able to drive and increase their revenue. From an HCL Tech standpoint, we really look at the telecommunication space in a 360-degree fashion. It's part of our ecosystem strategy. We work with telco operators in terms of helping them modernize their network, ability to improve their digital experience, customer experience, drive better revenue. We have engineering services, which works with the telco in terms of the packet core network and those pieces, but also help network equipment providers. A lot of the OEMs who are also customers for us, helping them modernize their network equipment, both from chipset, from silicon up to software.
Yeah.
And on the software product side, we've got a end-to-end industry solution stack for telecommunications, starting from digital experience on up to the network.
Yeah. So you must be catching up with a lot of clients over here. What are the cues that you're picking up from this year's Mobile World Congress, and what are the growth opportunities for 5G?
The first thing is that there's some 100,000 people who've landed up, which effectively means that this is becoming a full active show. The majority of the conversation, there are three key themes we are seeing. One is all about, okay, investments on 5G are happening. How do you really monetize 5G? Is how do you, both on the consumer side and also on the enterprise side, in terms of how do I really monetize 5G? The second thing which we're really seeing is this whole interplay of cloud hyperscalers along with the telcos and the network equipment manufacturers. What's the role of the hyperscaler in terms of how hyperscalers are building their network and also creating the hyperscaler edge, and how will it interop with the telco mechs? And that's going to be a big play. The third thing is this whole lines blurring between private and public networks. So we're seeing a big, clear play with large enterprise customers looking at how do I relook at my network modernization strategy and say, okay, how do I make 5G and evolution towards 6G in the future part of the core network modernization strategy of an enterprise?
Okay, digital is core, and then evolution of 6G in the future is what the tech companies are talking about. With that, it is curtains down on this edition of Trading Hour. Thanks a lot for watching.
Brought to you by